Welcome again to our YouTube channel, Money Matters Simplified. Remember to hit that subscribe button to up your knowledge in the money game. Hey there, future investors. Welcome to the ultimate beginner's guide to investing. Whether you're chilling in the US, vibing in India, living it up in Europe, or hanging out in the UK, we've got you covered. I'm Money Matters Simplified, your host, and today we're diving into the basics of investing with a sprinkle of pop culture and a dash of fun. Let's get started. First up, we have stocks, the Iron Man of investments. Just like Tony Stark, stocks can be flashy, unpredictable, and have the potential to soar to new heights. When you buy a stock, you're buying a tiny piece of a company. If that company does well, your stock value goes up. It's like owning a slice of your favorite pizza place. And if it becomes the next Domino's, you hit the jackpot. But beware, just like Tony Stark's adventures, stocks can be risky. Prices can drop as quickly as they rise, so it's essential to do your homework before investing. So let's dive into the basics and give examples of how to start. In the US, you can start by opening an account with platforms like Robinhood, E-Trade, or Fidelity. For example, buying a share of Apple or Tesla. In Europe, platforms like eToro, DeGiro.ig.com, or Interactive Brokers are popular. Consider investing in companies like SAP or Nestlé. In India, use platforms like Zerodha, Grau, or Upstocks. Consider investing in companies like Reliance Industries or Tata Consultancy Services. In Singapore, use DBS Vickers or Poems by Phillip Capital. Consider companies like DBS Group or Singapore Airlines. In Japan, use platforms like Rakuten Securities or SBI Securities. Look into companies like Toyota or Sony. In South Korea, use platforms like Mirai Asset Daewoo or Samsung Securities. Consider companies like Samsung Electronics or Hyundai. In Brazil, use XP Investimentos or Clear Corretora. Consider companies like Petrobras or Vale. In South Africa, use Easy Equities or Standard Bank online share trading. Consider companies like Naspers or Sasol. Bonds, the Captain America of investments. Next, we have bonds, the Captain America of investments. Bonds are all about stability and reliability. When you buy a bond, you're essentially lending money to a government or a company. In return, they promise to pay you back with interest. Think of it as Cap lending his shield. Dependable and trustworthy. Bonds are less risky compared to stocks, making them a solid choice if you want steady returns without the rollercoaster ride. Examples and how to start. In the US, you can purchase US Treasury bonds directly from Treasury Direct or through brokerages like Charles Schwab. Corporate bonds from companies like AT&T or Ford are also options. In Europe, look into government bonds from countries like Germany, also known as Bunds, or corporate bonds from companies like Volkswagen. You can use platforms like DeGiro or Interactive Brokers to buy them. In India, use platforms like Zerodha or HDFC Securities. Consider government bonds or corporate bonds from companies like HDFC or ICICI. In Singapore, use DBS Vickers or OCBC Securities. Consider Singapore government securities, also known as SGS, or corporate bonds from companies like CapitaLand. In Japan, use Rakuten Securities or SBI Securities. Consider Japanese government bonds, also known as JGBs, or corporate bonds from companies like Mitsubishi. In South Korea, use Mirai Asset Daewoo or Samsung Securities. Consider Korean treasury bonds or corporate bonds from companies like LG. In Brazil, use XP Investimentos or Banco do Brasil. Consider Brazilian government bonds or corporate bonds from companies like Ambev. In South Africa, use Easy Equities or Standard Bank online share trading. Consider South African government bonds or corporate bonds from companies like MTN Group. Mutual funds, the Avengers assemble. Last but not least, we have mutual funds, the Avengers of the investment world. Just like how the Avengers combine their strengths to save the world, mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. This way, you don't have to pick individual stocks or bonds yourself. It's managed by professional fund managers who make the decisions for you. It's like having Nick Fury guiding your investments. Pretty cool, right? Examples and how to start. In the US, consider funds from companies like Vanguard or Fidelity. For instance, Vanguard's Total Stock Market Index Fund, also known as VSAX, or Fidelity's 500 Index Fund, also known as FXAI. In Europe, look into funds offered by companies like BlackRock or Vanguard. Examples include the BlackRock Global Allocation Fund or Vanguard FTSE All-World UCITS ETF. Platforms like Hargreaves Lansdown or Interactive Brokers can help you get started. In India, use platforms like Zerodha Coin or Grau. Consider funds like SBI Blue Chip Fund or HDFC Balanced Advantage Fund. In Singapore, use platforms like FSMON or OCBC Securities. Consider funds like Lion Global Infinity US 500 Stock Index Fund. In Japan, use platforms like Rakuten Securities or SBI Securities. Consider funds like Nomura Global High Yield Bond Fund. In South Korea, use platforms like Mirai Asset Daewoo or Samsung Securities. Consider funds like Mirai Asset India Sector Leader Equity Fund. In Brazil, use XP Investimentos or BTG Pactual. Consider funds like XP Long-Term Equity Fund. In South Africa, use Easy Equities or Standard Bank Online Share Trading. Consider funds like Allan Gray Balanced Fund. Why should you invest? Now, you might be thinking, why should I invest? Well, remember the scene in Harry Potter when Hermione says, "I'm hoping to do some good in the world." Investing is kind of like that. You're growing your wealth while potentially supporting companies that make a difference. Investing helps you build financial security, achieve your goals, and even retire early if you play your cards right. Plus, starting young gives you the magical power of compounding. Your money earns money on itself over time. Tips for getting started. Ready to get started? Here are some quick tips. Educate yourself. Learn the basics of investing. Books, online courses, and financial news are great places to start. Set goals. Know what you're investing for. A new car, a dream vacation, or a comfortable retirement. Start small. You don't need a fortune to begin. Even $50 or 500 rupees can get you started. Diversify. Don't put all your eggs in one basket. Spread your investments across different assets. Stay consistent. Invest regularly, whether the market is up or down. It's like working out. Consistency is key. And there you have it. A fun, simple guide to stocks, bonds, and mutual funds. Remember, investing is a journey, not a sprint. Start small, stay informed, and keep your eyes on your financial goals. If you enjoyed this video, smash that like button, subscribe for more awesome content, and hit the bell icon to stay updated. Got questions or want to share your investment journey? Drop a comment below. Until next time, happy investing.